We will get to them. We'll do some announcements towards the end. Um, as always, it is an absolute honor to spend my Saturday morning with y'all. I'm
Yeah.
highly caffeinated, and I'm not going to apologize for it. We got a good group in the room, and I'm excited about it, guys. Today's guest, we do our absolute best with our founder and our amazing coach Michael and myself. We do our absolute best to ensure that you guys have everything that you need to be successful real estate investors, not just because you want to buy properties and make some money, but because we want your businesses to be profitable. We want your business to be structurally sound. And most importantly, we want you to have all the advantages that we felt like were hidden from us before we started this journey. So the guest that we have today is somebody that I'm really, really excited about because for some reason, towards the end of the year, everybody gets this bug and they want to start talking about taxes. They want to start talking about the
Mhm.
breaks and the benefits that they get from being in business for so long, right? It's really been like a year, less than a year for some of y'all, but for being in business for so long that they want to start talking about the tax breaks. And guys, one of my mentors a long time ago taught me it is never about how much money you make, it is about how much money you keep. And so
Right.
today, I am extremely excited to be able to introduce our guest for the day. We're going to have a round robin. We're going to talk a little bit, but Sharina Padilla is an absolute rock star. She's an expert in tax solutions, and she's going to spend some time with us today answering some questions, talking about taxes in the real estate game. Sharina, welcome to the group.
Appreciate the invitation. I had the pleasure of collaborating with Eric, and I'm really excited about everything that you're doing. And that's definitely true what you said. It's not about how much you make, it's about how much you keep. So I'm excited to be here and answer your questions and interact with everyone.
Absolutely. Thank you very much. All right, so let's
Thank you.
jump into it. I think it would behoove everybody if we do the introduction first. Sharina, tell us about yourself, your business, how long you've been in the tax umbrella, and let's go from there.
Thank you. Thank you. So I have been with Engineer Tax Services since 2010. My prior life was in the architectural construction world. I did that for about 6.5 years for an architectural firm, construction, and then also corporate America. So I've kind of like evolved from there. And I joined the ETS team in 2010 as a project manager on the energy efficiency division, which is also a different type of certification for real estate developers that are able to um, incorporate energy efficient components into their buildings and get those tax deductions or tax credits. And there's some nuances in there. But for the real estate investor groups or the real estate investor members of this group, I think I can bring a lot of items to the table and value add based on what you guys have shared with me. Everyone is at different levels and they're kind of like trying to figure out whether or not they're on the right path. So that's kind of like where I come in as a trusted advisor and as a resource as well to help them and collaborate with their teams, whether it's their accounting, their legal team, and make sure that everyone's working together for their best benefit instead of working in silos, right? Sometimes we don't
Yeah.
understand things properly. And we do need to have that extra set of eyes to make sure that all of our T's are crossed and our I's are dotted. From the real estate investment side, I bought my first property in 2006, and I've kind of like grown in that aspect as well. And I'm currently participating in various groups trying to bring tax equality to all. Because we all hear about people not paying
Yes.
taxes and we don't know how they do it, right? So we've been very
Absolutely.
blessed to be able to collaborate. My founder and CEO, Julio Gonzalez, was an integral part of that big, beautiful bill that just got enacted in July. He's worked in DC and we've been lobbying for years. Like this has been a process that we've been working on since 2018. I'm very proud that it finally came through. So
Yeah.
we're really happy that you guys have opened the doors and happy to share our knowledge, our expertise to make sure that we're elevating everyone and you guys are being able to take advantage of what's available.
Absolutely. So I want to kind of build this talk up, right? I think we start at the lower levels, make sure everybody's kind of understand where we are, what we're doing today, and then we'll build up and attack some of those questions. So talk to me. You bought your first property quite some time ago. Talk to me about the bottom line, the baseline benefits that a real estate investor gets in terms of tax breaks, and then we'll build up to like things like cost segregations, 1031 exchanges, things like that. But what are the first five things, five, seven things that somebody should look for as an automatic benefit for becoming a real estate investor?
The main benefit is being able to capitalize on the depreciation of the asset that you're acquiring. So I know you mentioned like cost segregation. Yes, that allows you to bring the accelerated methods into place. But even with the straight line depreciation, if you're just starting, you're going to get some benefits in there. So the investment that you're making in your property, you're able to offset that income by taking depreciation as a whole. And then we obviously can start talking about the more advanced or sophisticated strategies for those who are at a point where they have high earnings and they also want to mix that in with their passive income and become active investors as well.
Awesome, awesome. So here at the Win Blueprint, we literally teach everybody like they are in the ninth grade, right? And we start with things that are as simple as definitions. Explain depreciating assets for us in terms of taxes, and then we'll dive in a little bit more on that.
Beautiful. Yes. So I appreciate that. Um, so if you have a building that you're buying, let's say you buy a property for $100,000, right? And you're allowed to take depreciation on that property, and that usually for residential investments you get 27 and a half years. So you divide your $100,000 into 27 and a half years. That's going to give you, I don't have my calculator, I should know this by heart, right? 100,000 divided by 27 and a half, you get about $3,600 in depreciation. So let's say your property is producing $10,000 in income every year. And then now you have to go back and deduct all of the expenses. And that begins with the property management, the maintenance, the repairs, your insurance, property taxes, and all of the things that need to go in that process, right? And then you may end up with a profit, right? Whether it's $5,000, $4,000. We're all here in this business because we want to get a profit and get some money left at the end of the day, right?
Yes.
So let's say you end up with a $5,000 clean after you've deducted all of your expenses. Now you have the ability to reduce that $5,000 uh, revenue by $3,600 just by doing the straight line depreciation. When we start
Yes.
getting into a higher level of investments where now you're buying a property that's 500,000 or $1 million, then this is where it starts making sense to start applying other strategies to make sure that you are keeping as much money in your pocket as possible. And the IRS allows you to do that legally. So when you start looking at it, do you want to take depreciation, $3,600 for 27 and a half years? Or would you rather take a $30,000 tax write-off in the first year and then maybe end up depreciating about $2,000, $2,500 for the rest of the life of that property? So that's where the difference comes in. Does that make sense?
Absolutely, absolutely. I hope you guys are taking notes. I hope you guys are comparing some of your questions and making sure that we are able to get this information to you in a manner that's digestible. Because I know sometimes we start talking about things like taxes and insurance, and it starts to sound like the Charlie Brown teacher. But I promise that all of this information is going to be absolutely beneficial to you. Can you talk to us, like, as our portfolios grow, say from our first rental to a larger portfolio, and since so many of us are out of state, how do we adapt the tax strategies that we have to make sure that we're not overpaying based on like double dipping from the state that we're in to the state that we're investing in?
Yeah, no, that's a great question. The best way to handle that is to constantly be reevaluating and looking at your numbers, right? Your numbers are not going to lie at the end of the day. So how
Yes.
much money is going in? How much money is coming out? What do you have left over as a profit? How can we keep that profit in your pocket, right? So
Yes.
it doesn't matter depending on how fast you are growing. It's not going to cost you anything to bring the team together. At least from our side, we are servicing all 50 states. We've been doing that for 25 years. I'm 15 years in the making here. So for us, we're already at that position where we want to make sure that people are taking advantage of these strategies. So it just takes a phone call, an email. Hey, I just made this transition. It just the best way to explain it is this: as a family unit, right? Every time you go through a life-changing event, you want to recalibrate, right? Same thing
Yes.
happens with your business and with real estate investments. If there's any major changes, you do want to sit down and bring everyone together and make sure that you are taking advantage of everything that you're allowed to take. No one said that you have to live a tip on the table, right? I'm not against paying taxes, but it's like if we don't have to pay extra, hey, be my guest. Let's bring those strategies into play here.
Yeah. So if I'm hearing it correctly, if I'm breaking it down, it would literally be every time we purchase a property or every time we have a property successfully flipped, we should double back, right? And just make sure that we have our numbers from our win calculator and that we talk to our tax professional. And then, if we're choosing to partner with you down the road, then we reach out and make that call as well. Um, you mentioned the big beautiful bill, and here at the Win Blueprint, we pride ourselves in not talking about politics. However, this is a business. And so I would love if you could talk to us about why the tax code is beneficial to business owners and real estate investors.
Yeah. Well, there are a lot of great things in this bill that benefit business owners and anyone that's investing in real estate. The IRS wants you to get your brownie points, right? And the reason is because a lot of people say, well, why are they doing this? Like, is this a catch-22? Are they going to get me in the back? What's going to happen here?
Yes,
This is
yes,
too good to be true. So, but the idea is that government cannot afford to bring housing to everyone that needs it. And it's not a secret that we are dealing with a major housing shortage. So
yes,
the government wants to incentivize those that want to partner with them. That's how I like to say it. It's like the IRS is our partner at this point, right? We are bringing in the assets and we're creating housing for those that need it. And the government can't cover for everything. There's obviously programs out there, but we want to get incentivized so we can continue growing our portfolios and take advantage of those items. So let's not look at it as a downside. The big beautiful bill is bringing back bonus depreciation, and I'm not
mhm,
sure if the group here is familiar with that, but what that means is that when you're taking that one property that I explained before and divided it into 27 and a half years, you're able to take that accelerated depreciation and maybe take a higher percentage. Remember, I used the $30,000 figure before, right?
yes,
So, with bonus depreciation over the last 3 years, that regulation has been phasing out. So instead of taking the
yes.
full 30,000 figure, they said, well, probably you could take 15 up front and the other 15 you can take it over the period of the next 4 years. And as the years went by from 23 to 24, the upfront benefit was getting smaller and smaller. So, what the big, beautiful bill brought back into the table is like you no longer have to wait 5 years to take that benefit. You can go back and take 100% of that benefit in year one. So, how
Okay.
does that look for investors? Well, if you're making that investment and you have to put 20% down, to acquire that building and get it running, have expenses for renovations or whatnot, you could potentially get 30 to 40% back in tax deductions in that first year.
I love that. Now, does that matter in terms of the entity that you build your real estate portfolio over? There's always a conversation between building it as an LLC or transitioning to an S corp. all of those are pass through entities, but does the benefits of being a real estate investor, does it matter in terms of how you have that corporation set up?
Not necessarily. At the end of the day, LLCs are more for asset protection. And what that means is
Hmm.
that you don't want to be liable if something were to happen in your property for the tenant or whomever gets into a situation that we're not expecting to come back after your other assets. So it's
Right.
important to have each property into an individual LLC for asset protection because you don't want
Nice.
one property to get, um, taken away because of some loss, right? So you want to keep everything separate. Uh, Whether they're S corps or any other type of pass-through entity, that's just all going to depend on that tax structure that you need for the business that you're running. I have clients that have a combination where they do fix and flips and they do all of that on under an entity type, and then they have their short-term or long-term rentals into different other types. But at the end of the day, once all of those pass through to the individual, then you're able to capitalize and get those K1s, and take those items into consideration and write off as much as you can. And you may have some businesses that are highly profitable and other ones that are not, and then it all comes together and the wash at the end.
Awesome. So, assuming that we are all international, I mean not international, national real estate investors, we haven't touched the international part just yet. A couple of us, but let's say we have multiple LLCs. We own property in 4 or 5 different states. Um, is there a structure in terms of a holding company, or is there a structure in terms of filing individually? How would you approach someone that owns property in multiple states, filing their taxes so that they get the most protection available?
Well, I'm not a CPA or an attorney, so I do have to throw that disclaimer in there. I can only speak from experience on what I've seen my
Sure.
clients do, and it does depend on your specific situation and what you're trying to accomplish. So at the end of the day, the way I always try to advise my clients is let's figure out where you are now
Hmm.
and where you want to be in the short term and a long term. And let's build that roadmap together with your team. Like, I'm not there to replace them or to try to tell them what to do, but I can explain and bring the resources and the supporting documentation from the IRS where it tells you, hey, this is what you should do in this specific scenario.
Yeah, I like it. So I have 2 questions, and then we'll open it up to the big group. I want to make sure that that Eric and Michael have a chance to chime in, as well as all of the wonderful, wonderful mentees that we have on the call. So my first question, I like easy questions, right? Because it's Saturday morning, coffee is kicked in, but I don't like thinking that hard. So the question we get all the time is, when we have a cash out refi, why is that cash now tax deductible?
Because that's considered income.
Tell me more. Tell me more.
So at the end of the day, we want to make sure that anything that we're doing where there's a transaction in place, that we are setting structures to make sure that we have that tax mitigation tool, right? Because it's not so much as, how do I explain this? We all want to get into the business and we want to make money, but we
Right.
always have to think about the exit. What's my exit plan? And each property, you may have a different plan. Maybe you want to cash out and refinance. Now you're getting a lump sum of income and that's getting taxed, right?
Hmm.
Or you are selling the property and now you're getting taxed on the capital gains. So we want to understand exactly what is the plan, right? And things could change because
Absolutely.
we don't, there's things that happen that we have no control over, right? So, but for the most part, if we are proactive and we're able to put those structures in place prior to the event happening, then you may be able to, um, get more of those funds to help you.
Yeah.
There's one thing that I do want to mention because a lot of people say, "Hey, well, I'm getting taxed on that cash out refinance." What are you doing with the money? Are you going on vacation? Are you going shopping? Or are you taking it out to reinvest on your next asset? And it's very
Yes.
important that for those that are considering to do that, whether they're putting it on a fix and flip or buying another rental property, you do it within the same tax year. Because if you sell in December and buy another property in January, you're going to get taxed heavily. So that's why planning and creating that roadmap is so important. And you guys do a great job with your calculators and trying to figure all of that. But if we can enhance it to create some deadlines, right? And have benchmarks. And again, there's things that are out of our control and properties are not available when we need it. But right now we're like in the perfect time. We are we have we're in September already, right? So we
Yeah.
already have 4 months left, right, to plan. So let's figure out what has happened since January until now and
Mhm.
get those projections till December 31st. And let's figure out what you can do in the next 3 to 4 months to make sure that you're setting yourself up for success. Because once January 1st comes, you're done.
Yeah.
Whatever happened in 24, that's what happened. And unfortunately, there's not many options that we can do at that point. But we do have time to start looking at some options and um, obviously uh, get set up for success. So when 2026 comes around, you're able to file your taxes and hopefully get a refund.
Yeah, one of my favorite TV shows. I don't know if you've seen it or heard it from it. It's called Billions, and I remember them talking about a tax break, and literally on like Christmas or something like that, Bobby Axelrod bought a jet because he needed to get rid of some money for that end of year. Before I ask my next question, we got a really good question in the chat, and I know let's consider it being in theory because everybody's situation is different. But someone asked, what about those of us who own a property in our name because we lived there first and converted it to a rental? What's the best way to move that property under an LLC and not trigger an interest change? Have heard of a quit claim deed, but have not done one and have it at 3%. Don't want to lose that. And then there's always you could trigger a sale with that lender or somebody else that Eric had mentioned. But what's the best way to move the structure of a property if you have it under your own personal name and want to move it under an LLC?
Yeah, definitely the quit claim deed is going to be step one, right? I've seen clients where they don't notify their mortgage lender of the change.
Mm-hmm.
Um, and some of them they do get caught. So it's kind of like uh, one of those situations where you just kind of have to figure out, maybe make some phone calls and see if there's anything you can put in place to as a safety net when you make that change. The cool part is that once you switch the ownership to the entity and you place the property into service for uh, being used as a rental, then you're going to be able to start getting that depreciation. But I would definitely, just start with the quick claim deed and see if that doesn't trigger any changes. Like you
Awesome.
are, as the note holder, you are responsible for notifying the bank of any changes. Um, so at the end of the day, that's more like a question for the legal teams to figure out
Yeah,
what would be in your best interest.
I love that. Thank you very much. So, right now, quick pause. We've been going for about 20 minutes strong, and you have been absolutely phenomenal. Thank you very much. Um, E- Eric, is that I'm missing in the chat? Anything that you want to add or ask?
No, we got another question in the chat from Ms. Deja Wilson. Uh, do you recommend any habits that investors do with their monthly profits that will help prepare them for their upcoming tax seasons? Part one, and should
Of
investors be
profits?
putting a percentage of profits aside? You should be putting the biggest percentage of profits aside. Yeah. Yes.
The overall answer is yes. Sarita, can you tackle that question for us? Any habits that you would suggest that we can prepare uh, for upcoming tax seasons? And I'm assuming that would be maybe an investor strategy, right? Do you want to take some of those profits and put them in a self-directed, and I know we're getting into finance, but uh, put them in a self-directed 401k or some type of brokerage account so that you can earn interest on the money and then be taxed on the income instead? How does that work?
Yeah, so I agree with Eric. Like any tax savings that you're getting from those profits, they're going to be better managed if they're put into some type of alternative investment account. I always like to say a dollar saved today is it's worth more than a lot of dollar saved a year from now, right? Because we want to take advantage of that compounding and interest. So if you are getting profits, just know that you're going to get taxed on that. So if you can put that money to work for you, and then from there, you'll be able to have enough money to pay the taxes and still keep some money in your pocket, right? Or save them, and maybe you can make some decisions as the year goes by on whether or not you want to invest or partner with someone that's investing in another project. That way you can get the depreciation benefits. I think like the depreciation is going to be like the most powerful way to write off that income.
Yeah, absolutely huge. Michael,
And
am I
then
missing
the other thing
anything?
that I would say,
Oh,
it's
sorry.
before the end of the year, let's consider um, doing some other investments within our asset, right? If we have a rental property, maybe we want to buy new appliances. If we know instead of paying the IRS, might as well just put that back in your pocket because that's going to help your property be rented sooner rather than later if you have those additional things. So maybe planning is it's so important, guys. So understand that those profits, you could do so much with them. Don't just go around and spend them, right? Get the next nice car or the nice bag or the nice shoes. I have a good friend of mine. She's a TV producer, Nelly Galan, out of LA. And in her books and her speeches, she always say, "Don't buy shoes, buy buildings." So
I love it.
it's such a it's so true. It's so true, you know.
Yeah,
So we gotta,
yeah.
put that in place. And it's all about a mindset change. You will get eventually to buy those shoes. You will get the opportunity to take that nice trip. You will get the opportunity to do something nice for your family. But as we're building the business, we want to stack up those benefits and continue investing in our growth.
I love it. I love it. World famous Michael Williams. Is there anything that I'm missing? Any questions that you wanted to ask Sharina?
Yeah, I have a couple of questions, but I love that she talked about mindset shift because definitely when we start off
You're
in the Win
frozen.
Blueprint, we discussed transforming your mindset. Uh-oh. Why does that always
Nope, you're good.
happen?
You're good.
No,
Keep
you're back.
going.
Can you
You're
guys?
You're
back.
back.
Okay. Okay, so
Yes.
we talk about transforming your mindset from consumer to investor and how important that is. And then you spoke about planning. So a lot of our investors are brand new, have never invested before, and they've often asked me, what type of programs do you recommend when you're starting to keep your books? Do you have a tool or system that you recommend for tracking deals or finances or projects to help them when tax time comes?
Yeah, well, there's a lot of tools in the market, and now with technology, the technology advances, we have so many ways to optimize our processes, right? But for a new investor, you have to find what works for you, right? Don't let this overwhelm you. If it's easier for you to start a spreadsheet and start tracking your expenses, it's not that hard. What money's coming in, what's coming out, you should have that clear 100%, right? And if you need to look at your finances every week, every month, you're going to have to figure out what works for you to make sure that you're understanding how you're performing. So if you don't know how your business is performing, you you don't have a business. So you want to make sure that you're setting those habits and making sure, and it doesn't matter how many apps or how many subscriptions you pay, whether you're getting QuickBooks or you're getting some type of platform to manage your investments. It doesn't matter if at the end of the day you're not taking time to keep the numbers in order.
Right.
Yeah.
I love
Yeah.
QuickBooks Online too because you can actually screenshot receipts and screenshot certain things, and it'll upload it straight to your accounting software and include a note that will match it up with your withdrawal in your account or your credit card expense. Um, so it helps you to say, hey, I, for instance, I have cars that I rent out. Hey, I spent this on tires, so it will automatically go to maintenance in my cars as soon as I put in tires. And so that way, when the accountant pulls up everything, it's already allocated and
Right.
categorized. Um,
Yeah.
I wanted to ask you, just as because a lot of these are new investors and they're just going to be getting started, or they just have gotten started. What are some common mistakes that you've seen as far as tax, wise, when they're getting started, that you would want them to avoid when they're starting up, that could cause them to be penalized later on?
Well, definitely the bookkeeping is so important. So don't fall
Okay.
behind on the bookkeeping. And the reason is so many things happen with properties on an annual basis. If you're not keeping track of those items, you're going to be paying for it at the end of the day. So even if your tenant calls you up and they say maybe a faucet is not working, and there's time, travel, equipment, maybe a contractor that you have to call in to do this work, make sure you're tracking all of those items, including your time. We didn't get into the more sophisticated strategies, but as you get more experience and you start buying 2, 3, 4 properties, you're gonna unlock a new level of deductions. And having a log of your time is going to be so important to use as documentation, because with the IRS, it's all about the documentation. So tracking is so important. Don't fall behind with that.
I love it.
Yeah,
That means every time we take a phone call, we're gonna start looking at how long we've been on the phone with you guys. Because we
Well,
gotta make sure.
right. Well, there are applications out there. Like I personally use the Zoho Enterprise to track all of my deals. There's other newer ones, Odoo, and I've, you could go online and you'll find hundreds of them. But there's a lot of um features that these applications have that you can make phone calls from there, and it automatically logs the call and the time, and then you can run reports. So it doesn't mean that you're putting extra time. You're just working smarter.
Yeah,
Because a lot of
yeah,
times, as we get started with new projects or new initiatives, we think, oh my God, we have to do all of these things. That's the last thing that we want to share with you here. It's like, it can be done. You just need to, start working and spending some time on figuring out which applications you're going to need. And the technology is there to help you.
yeah. I think that's the most underrated title we've all had as an investor, is where we spend our time, is how much of our time we spend on what, and is that time being productive? We got a question in the chat where someone says they're on a W-2 and soon planning to get their first investment property. How can they maximize the deductions? And I guess I'm assuming have those two cancel out, right? Where you can have your investment property kind of cancel out your W-2.
Real estate professional status.
You
So
skip
you're
over.
going to need to track your time to be able to qualify for that.
Awesome, awesome. So in terms of moving forward to like this next section, and we got about 20 minutes left, and I want to leave some time for additional questions, but I would not be a good host if I didn't talk about cost segregation, right? Because that's on everybody's mind right now. Everybody's hearing about it, want to know how it works, and it's like the new cheat code, right? So can you break down cost segregation, what it is, how it can be a benefit, and when if you are able to participate in that?
So, foremost, I want to start by saying that not all cost segregation studies are created equal. So just understand that. So when you are in the market trying to figure out whether or not this benefits you, you need to understand what is the scope of work and what is the type of support that you're going to get from those vendors as you go through that journey with them, right?
Mhm.
From my perspective, we're obviously been in the industry for 25 years. We are the largest national cost segregation provider and tax incentive services. And our goal is not just to provide you with the numbers that are going to get you that first year benefit. We want to make sure that we are providing you with a full engineering study that you can use as a living and breathing document for the lifetime of that property. So we do things a little bit different when it comes to the actual documentation and support that we offer. So just to take it from the top, cost segregation is an incentive to be able to allow real estate investors to get accelerated depreciation. So we talked about the standard depreciation where you could take approximately $3,600 on $100,000 investment. Um, in this case, with cost segregation, you can take a higher lump sum upfront and then still have depreciation to take for the rest of the life of the property. And that allows you to increase the cash flow and continue reinvesting and growing your portfolios. So the way that Engineer Tax Services and my team, we try to add value to those investors is by being a resource and a partner to them and their CPA firms. So we'll come in and get just basic details on the property that you're looking to acquire or that you recently acquired. We'll take the address, the date of closing, and the purchase price. And then we want to understand like whether or not you're going to be doing any investments on improvements, because that is where we can make a difference, right? It's great that you can get a $30,000 write-off and then that's it, you're a done deal. You paid $1,000 or $1,500 for study, and then you can't do anything else with that. We go in and break out every single component within your building. And the way that that helps you is that you are going to have a fixed asset schedule of everything that's in there. So in the future, if you do end up doing any renovations, whether they're interior, exterior, maybe you're putting in new landscape, or you're replacing your roof or your windows, you want to make sure that you understand the price tag attached to each of those line items. Because every time you remove something and you take it out of service, you're pretty much throwing money away. So it's important to have that line of communication with your accounting team and keeping clean records. And our reports are going to allow you to do that. The IRS actually prefers the accelerated method over the straight line, believe it or not. And the reason for that is that it is more accurate. Let's say you bought a property 3 years ago and you end up replacing the roof today. That roof, that new roof that you're putting in, your CPA is going to get that contractor's contract or invoice. They're going to book it in as an additional asset. And your main building is going to still depreciate using that straight line depreciation method. But what happens is that now you're depreciating two roofs, but you only have one in place. And the accountant wouldn't know how much the old roof cost unless that roof was broken down and you actually had a breakdown of everything that makes up that old roof, because you paid for it when you bought the property.
Correct.
So with the detailed engineering study, you're pretty much going to get everything that you need to not only take advantage in the immediate return, but also in the future if anything were to change with that property. The other plus of doing obviously business with us is that you would have that hands-on white glove service. We'll take the time to talk to your accounting team, to your legal team, make sure that we understand that whatever we are doing works for you. Before you act, you have to pay us anything. And we do this like free of cost. If the numbers make sense and this is going to be a strategy that could be implemented, then there will be obviously a fee associated with it. But we do all the upfront pre-qualification work to make sure that you are, getting the best service and that you're getting all the details you need.
I love it. So back to my easy questions, right? Because I think cost segregation, I mean, while it is an amazing benefit, it's not something that can be explained in a 10-minute call, right? And I think that we would love to ensure that everybody has an opportunity to understand that in depth. So we'll make sure that everybody has your contact information. But we keep mentioning the term depreciating assets when everybody gets into real estate for the appreciation, right? For the
Mhm.
buying it at 100 grand and in 10 years it being worth, 150 or something to that effect. Can you talk about the difference in terms and how we classify real estate as an appreciating asset, but the tax strategy being that we look for depreciating assets?
That's really, really good question. Let me not get too technical, but in that case, we want to make sure that all of the assets that you have in your property, that you are not going to be held to have to pay recapture at the end of the life cycle, right? So we want to make sure that we're managing those items properly. So yes, you're going to get the appreciating asset because you're trading your tax liabilities for that asset. But
Mhm.
those tax liabilities are being eliminated, um, and offsetting all of the income that your property is producing. Does that make sense? So it's
Absolutely.
not like you're lowering the value of your building by taking the depreciation. You could take the depreciation and you can actually retire assets as you go through that process and do the repairs and maintenance to make sure that you're not lowering the basis on your property.
Love it. Thank you very much. We're going to run back through some questions as we get close to wrapping up. The first question that I want to circle back to, um, Hope had asked, she says she didn't realize you can get a refund without having a W-2. Can you talk about what that structure would look like and how that could possibly work?
You cannot go get a refund without having a W-2. Is that her question?
She said she didn't realize that you can get a
You can.
refund.
Okay. Yes. So there are a couple of strategies, or like some may like to call it loopholes, right? And the
Mhm.
short-term rental industry has created this loophole that allows you to offset your active income, meaning your W-2 income, using the losses created from the real estate activities. And that's the simplest way right now, and it's very common that a lot of people are taking advantage of this. I work with physicians and attorneys, and all of them are investing into that short-term rental market. It is a lot of work, but the IRS has made it a little bit simpler to qualify for that real estate professional status. You only need to meet 100 hours of material participation, and there's a couple of nuances depending on the type of work that you're doing as a W-2 income earner. So we'll have to have a separate call to actually understand what that person's specific situation is. But
Yeah.
if you are a W-2 earner and you're
Mhm.
in somewhat related to the real estate industry, you can also use the accelerated depreciation by being a real estate professional. And that you don't need to have a short-term rental. You could do it with long-term rentals. It's just that the hour participation is going to be a little bit higher because it's 750 hours.
Yes.
And that's hard to justify when you only have one property. So
Right.
that's where I'm saying that as your portfolio starts growing, you're going to start unlocking all of these other incentives. And obviously, we can work on figuring out what would be applicable to that specific individual.
I love it. I love it. Okay. So now I'm going to circle back. Do we have Eric, Michael, any other questions that I may have missed? I know we've covered a lot of information. And I don't want to assume that I'm that good at screening and toggling and multitasking that I have reached all the questions. So is there anything that I missed?
No, looks like question
Yeah, I
wise,
don't
we
think
got
so.
everything.
It looks like I am
Everything's
that
good.
good. Is that what you're saying?
That's what it looks like, brother. That's what it looks like. But I do want to say that when I sit down with my tax strategist or my CPA every year, we have about a 2 or 3 hour talk, and it is boring, but it's enlightening every time I have it. So getting her to do this for an hour, everything is not going to be answered. And there's going to be a lot of questions that you guys need to get on a call and have a one-on-one. If it's something that you guys want to do, and you want to get all your answers, your questions answered. But I mean, taxes is probably the most important part of your real estate investing journey.
Yeah, yeah. It's. I
If
mean,
I
I
may
can't.
add,
Yeah.
Yeah, if I may add just one more comment, there's a difference between a tax preparer and an actual tax coach or strategist,
Strategy.
right? So you all have to understand what that difference is. And yes, money, it's one of the differences. But one, the tax preparer is going to be recording historical data. And then at the end of the day, the system's going to tell them how much you have to pay, and that's all they're going to do. And that hour-long meeting, it's not enough. I call those the average CPAs or EAs,
Yes.
right? So
Yes.
as you continue going into this journey, it will be in your best interest to work with a strategic CPA that's going to check in with you either a couple times a year or maybe 4 times a year to understand what you're doing, how things are going, and then actually be able to do that planning for you. Or you may complement your tax preparer with a consultant that may be able to uh, bring these options to the table.
Yeah.
So
One
average
of
isn't enough anymore. We want to make
Absolutely.
sure that if we're paying a high amount for those type of services, that we're getting a high return on our investment as well.
Yeah. I absolutely love that you brought that up. I think one of the things that I was talking to one of my mentees about not too long ago was actually having um, your taxes review. Once you level up and switch that strategy, right? Can you talk to us really quickly? We got about 5, 6 minutes left, about how far back you can go with your taxes to have them reviewed. Let's say you owned a rental property, like the previous person said, in your personal name, and now you've started an LLC and you own a property out of state. How far back can you go retroactively to look at some of the benefits that you maybe didn't take advantage of and can have those adjusted?
So for in general, for any type of business, there's a 3-year period, right? So and that starts from the date that you filed your last tax return 3 years forward. Some people file in March or April, and other ones do it in September or October. So figure out what your last filed return was, and then just count 3 years forward from that. And that's the period that you have as a whole. With real estate investments, you actually don't need to go back and amend any tax returns. So there's this cool way to be able to catch up on any missed depreciation on the current tax year. Meaning that if you bought a property 5 years ago and you spent $500,000 on that property and you didn't take the accelerated depreciation, you can still take that accelerated depreciation this year or next without having to uh, file an amended return and getting penalized. It won't even flag you or raise any flags. It's tax form 3115, and that gets prepared with a calculator that's 481A adjustment calculation. So if you have $150,000 sitting in there in depreciation, and you know you're having a great year this year because you did a couple fix and flips and you're going to have to pay taxes,
Mhm.
you should do a cost segregation study at this point and pretty much eliminate any tax dues at this point.
Very nice. Very
Really
nice.
quick, really quick, Chuck. We were
Yeah.
mentioning the app, and I just didn't want to get off before someone was asking about this app, and a couple people asked about an app that Sharina was mentioning. I don't, was it a
Zoho
Zoho?
Enterprises, Zuhu.
Yeah, so Zoho has I don't know, like 40 different apps, and within that it has accounting and it has project management and it has deal flow, and there's different things that you can integrate together. I use QuickBooks too. I also have a facilities maintenance business with my husband that we've been operating for 12 years. So we use a combination of these different apps to be able to track everything. um so I'm happy to share, if you guys need any advice, but I would have to learn a little bit like what you're doing and what you're trying to accomplish. I'm a geek when it comes to technology. I'm always trying out new things, and anything business related, I'm always I enjoy doing that. I don't have to get paid for that. I just got back from the Vault conference in Orlando last night. It was the Patrick Bet David community. I don't know if you guys are familiar with it. I learned so much. Those guys have so many things going on that you know we should all know about, right? So I have a long list of things that I need to start incorporating for my business, and happy to share my experience with any of you.
Awesome, awesome. And that leads me perfectly into my last one, Sharina. Let everybody know where they can find you, potentially schedule a consultation with you if they like to as well.
Sure. So you can find me at sharinapadilla.com. All of my social media handles are in there, my email, my direct phone number, my office number. So just go in there and you can even send me an email directly from there. And there's tons of case studies that you'll get access and see how that may, sometimes when we look at something and get the visual, we're able to understand a little better. So happy to help you guys, and I would be honored to answer any questions or maybe run some estimates for you to find out if you're leaving any money on the table.
Listen, that's the one right there. I don't want to leave no money on the table. All money in, guys. Thank you very much, Sharina. Your time has been greatly appreciated. Your expertise, obviously, on display. I'm going to turn over to Eric and Michael now for any updates. I know we got some events lined up and some announcements that they'd like to make. So I'm going to turn it over to them now. But thank you very, very much. Absolutely looking forward to rocking with you again soon.
Sure. If you don't mind, I'd love to stay and listen to what you guys have going on, and happy to support you in any way I can.
Let's do it. Eric, Michael, take it away.
Sharina, thank you so much for your time. We appreciate it. I love getting game on a Saturday, educating myself and educating the people. I absolutely love it. This is something that I've done for nearly 20 years just for tax strategy and I know how clutch it is at the end of the year and actually for your whole career and being a real estate investor because this is a career and it's something you guys should take very, very serious. Hey, so now, Michael, Chuck, we get into the good stuff, the fun stuff. We got boots on the ground coming up and our bus is booked up, y'all. We are full. So if you're not there, you are not there. And this is the last one of the year. I hope I'm seeing the Cobbs there. Yes. Yes, I'm seeing the Cobbs there. Yes. Hey, if you're gonna be at Boots on the Ground, please put it in the chat that you are there. Just say Boots on the Ground in the chat, please. Excite me because we got 30 days.
Excite
We got
me.
30 days left. Excite me. I will be there. Yes, Boots on the Ground, please.
I
I can't
love it.
wait
I
to
Yes,
see
love
you
and
it.
guys.
make sure you guys are aware that in order to get on that bus for no charge at all, you have to refer somebody if you've already been on there twice.
Bring a referral,
Or else
Absolutely.
we're
y'all.
gonna be sending you an invoice.
I'm
We're
itching
gonna
for
be sending you an
Yeah.
invoice.
Hey,
You know
y'all
what's
know.
what's
So
exciting
make
about
sure you
this, guys, is the first time that we did this boots on the ground, there was literally 4 or 5 of us in like a rental car. Then there was like 2 or 3 rental cars back to back, and then it's leveled up to this, I mean, huge thing where we
yes,
now have a bus. And it used to be that we were like, okay, are there enough people for the bus? And now we have a bus that's fully packed out with literally like 48-hour notice, guys. This is what's growing and what's happening right here is absolutely phenomenal.
Yes,
And we
yes.
wouldn't be able to do that without you guys' trust and the results that
absolutely.
we're bringing from the Win Blueprint. Okay, I'm sorry. Go back to
And
exciting
I
Eric.
just wanted to say, go on the Facebook page and look at the Drury information because we do have the hotel discount on there for everybody who's just now joining and hasn't had the opportunity to look at that and book. I would suggest, excuse me, book it in advance because the last couple of times that we've gone, that they've said the hotel is fully booked when people tried to book it a week early or maybe 2 weeks
Yeah,
early. They said there was no room. So I don't know if there's events going on in the area, and if there is, sometimes they're fully booked. So you guys want to make sure I would book it ASAP in advance just to make sure you don't lose the ability to stay with us because we're all in the same hotel and it's very convenient because our meeting room is downstairs as well. And make sure you're there Saturday night if you can be, just because Sunday morning we get started at 9 a.m. and some flights might make you late if you're trying to come in and maybe there's a delay or there's an issue. And we want you to be right there at the beginning when we're opening up. So some women are what they're doing, and men, what they're doing is coming in on Saturday night. And I'm going to put a post about 2 weeks or maybe a week before asking who's coming in early. So you guys can put your information, and some of you guys can Uber together. And a lot of times what women do is they come in or men and women, I got to say, keep saying men and women. I keep saying women because I'm used to dealing with women. But a lot of times what men and women will do is they will come in and eat dinner together. So they'll plan a dinner and say, hey, let's all go to dinner. What we're going to do different this year is we're going to do a WhatsApp. So on the WhatsApp group, and we found that some people are texting us like, when do we, especially when we split up on the second day with our agents, we always want to be able to make announcements. So you will get a notification to add the WhatsApp chat. You might as well go ahead and add it now if you're already on the bus. And Bernadette will be including you into the group WhatsApp chat for the October boots. And that way we're going to put announcements. So we're not always putting everything on the page. For the people who aren't going, they don't probably want to see that. But we'll be putting all the announcements everywhere we're going to be, all the addresses as we go, so that you'll constantly be updated to where we're at any given time, in case you take off with your agent for a little while to look at homes on your own. But we do have a strict time schedule. We just want to let you know that if you want to look at 3 and 4 and 5 houses, just realize that your agent has a group of people, you and other people. So they're not going to they have until 3 o'clock. So that you might have to come an extra day or stay an extra day into Tuesday, just to look at additional properties you might want to look at with your agent. If you just want to spend some hours doing that separate from the group, that might be something you want to consider. That's all I have to say about it. But we're excited. We can't wait to see you guys. We always have the most fun. Don't forget black and gold for the dinner on the final night. It can be a black dress with gold jewelry, or black pants, slacks with a gold, what you call it?
The Steve special.
Liberace jacket. Steve AK.
I love it. I love it.
Gold shades. I don't care what you do. Let's do black and gold. We look so
Black
cute
and
when we
gold.
do that. And don't forget to bring your t-shirts. Don't forget to bring your t-shirts, guys, because we do take group photos and videos on Sunday. And it needs to have your black and gold t-shirt. If you already have one and you've lost it, you need to go on the winblueprint.com website and order a new one before the trip. So, but if you are new and you've never had one, obviously we're going to provide you with one at the Boots on the Ground on the first day. So you'll get that from us, along with your notebook and your pen. And if you already have your notebook, please bring it back to take notes, because you guys know you guys are doing some writing. There's a lot of writing and a lot of footing it. So I'll make sure you guys bring sturdy shoes.
Some comfortable shoes.
Don't be
And
trying
some
to wear your
snacks.
cute heels. Don't
And
try
some
to wear your
snacks.
cute heels, your fuzzy slippers, because it's not gonna work in Cleveland. You guys are gonna be falling and spraining the ankle, and we already have a liability release, so we're not gonna pay y'all. Okay, just saying.
I love it. I love it.
Love you
We are
guys.
officially 3 minutes over. Eric, anything
Yeah.
you wanna mention before we tell them we'll see them either at the top or from the top?
You just took the words right out of my mouth. Come on, man.
Yeah, why are you ruining his
I messed up his thing. Well, because he's supposed to say thank you for coming
He's
out. God
out.
bless you.
He's
Good
out.
night.
He's done. He's done, bro.
Hey,
Now you got to take over for him.
hey, I appreciate everyone showing up on this Saturday morning and afternoon. For some of you, Sharina just dropped her information in the chat.
Yes,
It is
grab it.
great to see you
Grab it,
guys.
everybody.
It's great to
Yeah.
see you guys, the growth. This is amazing. This is what the future looks like for us. This is what building and growing a community looks like and feels like, guys. I cannot wait to see you guys in a month, 30 days from now. This is crazy. We are fully booked and we're going to have a good time. Make sure you bring your snacks. I can't wait to see you guys. Snacks, because I do not let you get off the bus and eat. You need to bring snacks. We are not stopping. We are working from the morning until the evening. Guys, we work for 2 days straight. I'm telling you, you're going to hate real estate by the time I'm done with you after these 2 days. But you're going to love us after, I promise you. Other than
And
that,
Natalie, we've already posted the information for the hotel as
it's
well
there.
in the Facebook group.
Did anyone have any questions before we go? Because I know there's questions. The itinerary is on the page. The hotel code is on the page. Keep that itinerary in your phone. We're gonna start the WhatsApp so we never get disconnected because we want to be disconnected to you. We want to be connected to you guys all the time, every day, all day. So that WhatsApp group, I just want you to know, it's only for the boots on the ground. We're not gonna be in there talking about our lives every day in that WhatsApp group. Because I
Right.
get out of there. I shut it down. So
We don't want to know what kind of shoes you wearing or how your dog
Right.
got sick.
Where you
We
eating? None of that.
hey,
Yeah, we don't want to
no,
know.
I'm kidding. It's all love, guys. Great to see you. Go have a great weekend. Let's go do something real estate this weekend. I appreciate it. I'll see
Go
you
have
guys.
fun. Go
Hey,
have fun.
Chuck,
All right. Bye,
Yes,
guys.
yes.
I see you from the top or at the top.
Guys, it's been phenomenal. I appreciate you guys
Ciao.
spending some time with us. Sharina, thank you again. Here's your one
Thank
challenge
you,
before
Sheree.
you guys get up. If you have time this weekend, if there's a new build in your area, go vision build, right? Go take a look at a brand new, bigger, better property so that you can have a vision for your next phase. Go look at some new properties, go get some ideas, and we look forward to seeing y'all very, very soon. It's been a pleasure. Win Blueprint. Love y'all.
Peace.
Bye.
Bye.
Bye.